Hey, what's up, traders? So I'm Brian Horton. I am a six-figure day trader. I trade the stock market and the Forex market along with my wife. We own BK Trading Academy. And I want to show you three steps that you need to use when you're marking up your charts to identify specific entries, even exits. Very, very easy, guys. And it all comes to price action. Price action relies on supply and demand, and every single market in the entire world relies on supply and demand. It doesn't matter if it's the grocery market, it doesn't matter if it's the food market, it doesn't matter if it's the real estate market, it doesn't matter if it's the Forex or stock market. Supply and demand rules the world. The only thing is we get to see and find those supply and demand levels on a chart, such as Disney. Let's go ahead and deep dive into it. So step one, you always want to identify the trend. The reason why you want to identify the trend is because typically, in most cases, it's less riskier when you're trading with the trend. Even if you get in at the wrong price, if you hold it long enough, you'll still make a profit if you get in with the trend. This is most cases, not all the time. And I'm going to show you how you can identify trends. You have to go to the higher time frame and notice I'm on the daily time frame. It doesn't matter if it's the daily, the weekly, or the monthly, just as long as you can see the overall trend. Now notice here I have the weekly time frame up, and I noticed and identified these key levels here. So overall, we were in a downtrend at this point, and then we started consolidating. This is why I found, or I drew these red levels here, these red rectangles, is because this is a consolidation level. Now, consolidation, for those who are new, simply means when price reacts to the ceiling, back to the floor, to the ceiling, back to the floor, the ceiling, floor, and so on and so forth, and it becomes predictable, right? This is the best thing that you can do when you have a consolidation, or also known as a range, because it becomes predictable. And the reason why it goes to the ceiling and the floor all stems from supply and demand. So this will be your supply level. And think of it as an entrepreneur or a business owner. When you have supplies, you're supplying something to a group of people, right? And whenever you have a supply of things and you're providing to a group of people, price starts to drop, right? And then when the price starts to drop, it starts to attract buyers. This is going to be our demand here. This is our demand level. This entire rectangle here below is our demand. So think of it like this. Whenever price drops, it's going to attract buyers, tons of buyers. Imagine your favorite clothing, right? Or even a real estate property. When price drops at a beautiful location, it is demand. It causes demand, which brings in more buyers. And that's all this line here indicates. And it's not coincidence that price comes down to these levels year after year after year. And it's not a coincidence that price rejects from this level year after year after year. Now, guys, we're trading Disney, and Disney is a Fortune 100 company. It typically rises in nature. So, in my opinion, it's best to buy down here. Now, in our private community, in our stocks community, we have a room here where it says BK Invest Picks. And this is where I drop in stocks or companies where I believe that it's going to be a long-term investment, anywhere from a month or longer. And you can see that I dropped this here back on April 18th, 2025. I said another BK Invest Pick Disney. And I talked about why I would invest at this area. Now, at that time, I dropped a chart analysis here, and this is how it looked. This is where it says April 2025, and price was at our, remember, demand level. This is a strategy that we have. It's called B swing. And this is where we buy or sell at areas that hasn't been tested for at least a year or so. At this time, price came here last in October 2023, and then it retested April 2025. So those who are in our Stocks Academy profited really well if they taken this trade. Now, if we fast forward today, which is May 8th, now look where price is currently at. It is currently trading, if you look on the right side of my screen, $105.83. Let's go back to that area here where I dropped it initially. It was at $84.81 when I dropped it here, right? So that is a beautiful gain from there, simply from knowing supply and demand and understanding that. So whenever people say you completely rely on support and resistance or supply and demand, it's not good. Trust me, every single market relies on that. So number two, that leads me to number two, you want to identify your key levels. And I've already identified my key levels here. We were in a downtrend, and usually B swing says that once it gets to a demand level, this is a trend reversal. And now we're starting to buy to the upside, and we can take it back up to this zone. 95 times out of 100, price is going to come back to this area anywhere within this red rectangle. And this is why I draw my red rectangle pretty wide instead of a skinny line like that, is because I want to entrap all of the price action from before when it was down here and even up here. And if I look left, it came down here and up here. So anywhere within this level, I could exit. You can even exit prior to that and make some money, right? So it depends on how long you want to stay in the trade or not. Let's go ahead and take a look at Boeing, another huge company. Now, Boeing has been having some bad news in the company recently due to their aircrafts and just a whole bunch of things, right? And we talk about fundamentals. That's fundamentals, looking at high impact news that can impact a company either negatively or positively. Now, if it impacts a company negatively, you can short sell and still profit. If it impacts it positively, you can buy and profit. Now, remember, the first step, we want to go to the higher time frame. You want to identify your trend. So let's go ahead and do that. As I look here, I notice that I am in a downtrend, right? It doesn't take a genius to identify that. We can see that price was headed down, and then all of a sudden starts to pivot. Now, this is what I'm going to show you here. First, identify your trend. So I'm going to draw a trend line just to make it visually appealing to you. And you can see what I'm talking about here, right? So here's my trend line right here, and we're in a downtrend. Now, the second thing is identify your key levels. These are your support and resistance levels. You can even call them supply and demand, depending on what you're seeing. Now, this is how you identify it. In a downtrend, you start with a high, then you have a low, you have a lower high, and then you have a lower low, right? So that's the sequence of a downtrend. This is what you have. Start from a high to a low, lower high, lower low, lower high, lower low, lower high. And what you want to do next is identify your key levels, which is this here. Normally, your lows will connect to your lower high. This is typically where you want to sell. And then you'll start to see this time after time after time. Your lower low right here becomes your future lower high. In other words, your floor will become your future ceiling. And this is something which you want to identify. If it breaks above it, now you can say that we're possibly in an uptrend. So let's go ahead and see what we see. So we have our high, low, lower high, lower low, and we're supposed to have a lower high about right here. Oftentimes you can sell when you identify that, but we broke above it right here, okay? So we broke above it. That tells us that we're possibly in an uptrend, and we're turning in an uptrend right here. So that being said, I'm going to draw a line right here. This was our lower low, and when you break above that, oftentimes it goes higher. Now that we see that price did go higher, it came back and retested down to our bottom. In this case, this could be looked at as a double bottom, and usually double bottoms are reversal patterns, right? So reversal patterns mean that we could be in an uptrend. Now that we are at the bottom, we want price to come back to test the previous lower low right here, okay? So we have price come down here. It came back and it's shooting up higher. And remember here, this here is our uptrend. Now that we've started kind of an uptrend at this area, we want to see this level. This here is a level now. We're ignoring this area for now because we broke structure. We're no longer a part of this downtrend. So we broke in structure, and now our new trend starts right here at our second bottom here. This is our new trend. Now we still have to identify levels where price can come back and retest for a possible buy, because in an uptrend, you typically want to buy in an uptrend. So that being said, here is our level right here. And then it broke through. And now what we're looking for is a retest. So we want price to head up and retest. This is a retest strategy. Whenever you hear something called like a break and retest, that means it breaks structure, it broke the ceiling, and then it usually comes back to retest to go back higher. So if we want to buy Boeing, we will want to buy at this retest support level and continue higher. So Boeing is doing pretty good. A lot of US companies are doing well, and it started to pivot when Donald Trump, the president of the United States, paused the tariffs. Now, that could have been a strategic move, but once he paused the tariffs, price for Fortune 500 companies and 100 companies started to go higher. Now, it's important to always keep in mind that the tariffs are important and that anything that key leaders say can completely obliterate our analysis. So it's important to keep your ear and eyes on high impact news. Let's take a look at Coinbase. A lot of traders are familiar with Coinbase. So remember, step one, identify the trend. We found our trend right here, and I can go ahead and simply draw a trend line connecting my highs here. So let me show you here on the daily. Let's go to the daily time frame, okay? And we want to pretty much connect our highs, try to get it to our other high here, and connect it as much as we can. And then once we do that, let's find our key levels here. So remember, in a downtrend, we start from a high to a low, lower high, then we have lower lows, we have a lower high, lower low, lower high, lower low, and guess what? It came right to our demand level. Remember, demand levels are reversal levels. Those are beautiful levels. And this is what actually retired me when I was working a 9 to 5. It was hard for me to trade in every single day. And so I would find these levels, which are pretty rare, but since there's a lot of stocks and a lot of Forex pairs, it happened often when you continue to look at this. Now, I only traded Fortune 500 companies because they typically rise in nature, but whenever they fall in a demand level, again, it's not a coincidence that price reversed right here, and now we're starting to go higher. So remember, a high, low, lower high, lower low, lower high, lower low, lower high, lower low, and a possible trend reversal because we hit a demand level. Now we can do something like this. It broke this area here. Whenever it breaks the previous lower low, now we can sometimes find it going to the next level, sometimes coming back to retest before it goes higher. All right. So we're no longer in this downtrend because it broke this previous lower low. So now I can go ahead and delete this. I'm going to draw my uptrend starting from my low here. And I'm going to do something like this here. So I want to try to connect my bottoms here from this bottom here to this low here, right here. And in an uptrend, you want to see the reverse. You want to see a high, a low, higher low, higher low. You get the picture. And then now we want to find levels like this, where our previous higher high is touching our future higher low. Our previous ceiling comes down to the floor and we execute to buy. Our previous ceiling comes back down to the floor and we execute a buy. That is the sequence. So now we see price is coming back to retest this zone here because this is a significant level. It came here once in our downtrend. Now it come here again in our uptrend, and now it's testing back. So what I'm looking for Coinbase is that price continues to go higher. Again, just in case, we want to make sure that no high impact news completely obliterate our analysis, like tariffs or anything like that. But in a perfect world, price should continue to go higher, retesting this previous lower high in our downtrend and coming back down to our support and then doing that structure again. And this is what we should see. And now we can start drawing our levels and doing something like this. And oftentimes you'll see this happen multiple times where our previous lower high becomes our future higher low in our uptrend. Our previous ceiling will become our future floor. Our previous floor will become our future ceiling. And that's the structure of price action. Remember, it's not just support and resistance. Don't think about support and resistance. Think about people with money. And people with money always want to buy things at a discount. Here's your discount right here in the future. Here's your discount right here in the future. Price should head up, come here, attract buyers. So it has to come down. And then you buy, execute, and you can hold it up to the next level. So that is Coinbase. Let's take a look at Bank of America. All right. You want to find the very first thing, your trend. Okay. Remember, on the higher time frame is where you can find your trend. You cannot find your true trend on the lower time frame. So I can find a trend here from this top going down here, but guess what? We're no longer in a downtrend because price started to shoot up, and you'll see 1, 2, 3, 4, 5 consecutive white candles. So Bank of America is doing good. Again, this area is where the pause on tariffs happened. I'm on the weekly time frame. Let's go to the daily time frame and drill down. So you'll see these red levels here, and the reason why I've marked them are significant, right? So let's go ahead and start from the beginning. We started our downtrend because we found this double top pattern. This is our supply zone right here. And then not only that, we found a double top. This is when tariffs were first spoke about with Donald Trump. This was February 2025. then things started to tank. Now, notice how price action starts to repeat itself and find these previous levels. And this is why I have these circles here. So in our uptrend, we were here and we found this. This was our low, our high, higher low, higher high, higher low, higher high, higher low. And I can just kind of find these levels very, very easily, right? So this lower high became the future higher low. This previous higher high became the future higher low, and so on and so forth. And then it came back to this level. This is a double top. Remember, a double top is considered a reversal pattern, especially when you're on the weekly or the daily time frame. Now we started to descend in a downtrend. How do we know we started a downtrend? When it broke this previous level here. That's when the downtrend started, when it came to this zone here. So now we have lower highs, lower lows, lower highs, lower lows. And now down here, we're in an uptrend right here because we broke the previous lower low. So this is where our lower low is, and we broke it. So let me go ahead and clear my chart up because I want to make sure that things are making sense to you without overcrowding my chart. I like a very, very clean chart. Now that we have a constant uptrend, we see a bullish candle here. Price came here and consolidated for 1, 2, 3, 4, 5, 6 to 7 days, all within this red zone. That tells you that this is a significant level. Price broke up. Where's the next price? Where's price going to? I would bet that price will come to this level before it starts to consolidate or drop. How do I know? Because this was our previous lower high. This is where our previous discount was. Usually our previous ceiling becomes our future ceiling or our future floor. So price will do something like this. It will come up to this level, possibly pull back, come back up, break and retest. And then this is where you will want to buy at. So we should see something like that. And I want you guys to get used to these patterns, finding these levels. The easiest way to find levels is to find pivot points. Here's a pivot point here where price shot up and abruptly dropped. Here's a pivot point when price shot down and abruptly shot to the upside. So whenever you see price abruptly go to the opposite direction it was going originally, that's one way you can find key levels. Let's look at Tesla as our final example. I want to make sure I drill this in your head and that you completely understand what's going on. And you can see I have these charts marked up already, right? So previously, we were in a downtrend. I'm on the daily time frame. I couldn't find that I was in a downtrend unless I was on the higher time frame, right? I'm in a downtrend. How do I know? Because I started with a high. Here's my low, lower high, lower low, lower high, and then here's a lower low, and then price stopped here and then start to shoot up higher. And now we can see prices consolidating. And this is why we need to go to the higher time frame, because this will help us to identify things like this, right? If we were in a higher time frame, we wouldn't know where we're at in the grand scheme of things. If we're in the lower time frame, and let's say we were here, and I didn't have these rectangles marked at all, I wouldn't know exactly where to buy or to sell. So I'm going to delete this just to kind of prove to you that things are difficult without going to the higher time frame. So let's go ahead and clear our chart out right here. And notice how price looks like in an uptrend and it's starting to pull back. So it's kind of hard to figure out what's going on. But on the higher time frame, you can find out what's going on by looking at these structures. And I noticed that we were consolidating. Remember, consolidating, also known as a range, is when price moves back and forth, up and down constantly, and it's a constant battle between buyers and sellers. So we have one touch here, we have two touches right here, and then we have another touch right here, totaling 3 touches at this demand level. You got it. This is our demand level. Remember, demand level is when price is at a discount. Think of it like people demanding a product. People are demanding Tesla because it is at a discount. Here's our supply level up here. And oftentimes you can find your demand and supply levels when price has touched the zone multiple times. So price is going up and down, hitting the floor and the ceiling, and now price is at the ceiling, and eventually it could break up or go down depending on how Tesla is. Now, Tesla has been in the news a lot because of Elon Musk and being political and a whole bunch of things like that, right? So this is why price started to drop. It looks like buyers are starting to step in, but sellers are saying, nope, I want this price to go down, and so on and so forth. It's playing kind of like a ping pong. Now that we see that price is at a resistance level, it can do one or two things. It can drop back down, continue to play ping pong, or it can break up. But if it breaks up, it will more than likely come back to retest, continue our higher highs and higher lows. But before we can do that, let's go to the lower time frame. So we're going to drill down until we start seeing patterns. Remember, patterns are huge in the trading world. And the reason why these patterns are huge is because it kind of helps us to predict whether if we should be buying or selling. Now, price is at this resistance level. Now, each candle represents 2 hours. I'm on a 2 hour time frame right here. And every 2 hours, price has been coming up and down, but not all the way down to our demand level. So I can safely say that this is kind of a minor support level. And I can safely say that this is a minor resistance level. So now I'm a narrowing price. The whole purpose of trading is to trap price. I'm going to delete this big line here, the supply line, and only focus here. So if you were wanting to intraday trade, and intraday trade simply means to trade within an hour or so, but before the end of the trading day, or if you wanted to scalp, scalping simply means you wanted to trade within a few minutes to maybe an hour, right? You would go down to the lower time frame and start finding patterns. So I found a support and I found a resistance level here that I can trade on the lower time frame if I don't want to be in a trade for too long. So let's go ahead and put resistance. This is the top level here. And let's put support right here. So now this makes it easily to identify what price is going to go. But we want to make sure we see confirmation. Here is a huge confirmation that price is going to drop. Look right here at this candle. We can see this huge wick rejection. And usually wicks tells us a story. A wick tells us that buyers were exhausted and sellers are starting to come in because price shot up as high as this, but sellers are starting to dominate. This will be a key indication that price would drop. So what I would do is enter now, and I can take it to the middle of this channel here. Or if I want to take it longer for about a day, maybe two, take it back down to this minor support zone. Remember, I started on the higher time frame to identify what's going on in the big picture. Here's my daily time frame. Here's my demand level right here. And then here was my supply level up here. And then I said, you know what? It's at a resistance level. It will be ideal to short sell, or in other words, to sell, meaning I'm hoping price drop because it's not only at my supply level where you normally want to sell, but if I drill into the lower time frame, let's say the hour time frame or even the 2 hour time frame, I'm at a resistance level simultaneously. So guys, this is how I like to trade. I like to start off on the higher time frame, identify my key levels, and then drill down to the lower time frame and simply execute. So guys, hopefully this made sense. Don't forget to like, subscribe if you haven't already. I've been trading for over 15 years. I started with the futures market. I trade stocks and Forex. My wife's been trading for about 10 years. Kenya, she is excellent, beautiful at risk management. And we lead our Forex Academy and we lead our Stocks Academy. And we're engaging there every single day, helping like-minded traders like you. I hope that this video has helped you. Feel free to drop a comment so I can respond to you and maybe help you as well. If you're looking for hands-on mentorship, all the information down below to our academy is in the description. And I hope to see you in the next video. God bless you. Let's make this a profitable day.